Shall we move on to the costing systems?
Yes, sir.
Okay. So we have standard costing. It can be used in process costing or job costing. Everything is taken at standard rate, right? What is direct material or direct labor taken at standard rate? Okay. Everything is based on what is allowed at a predetermined rate for overheads like that. So overheads rate will be like what is a predetermined rate and what is allowed like that we take it. Normal costing, direct material and direct labor, we take it at actual rate. Actual amount used for actual production, we take it. Then of course, overheads alone is applied at a predetermined rate for the actual usage. Okay, what way this, your standard costing and normal costing is uniform. In overheads, we use predetermined rate, but for the actual usage. Actual costing, everything is actual. Actual rate, actual route used for actual production, actual rate, then actual allocation base used for actual production like that. We consider everything what? Actual, everything actual like that. Okay, so this is about which one? The costing method of measuring the cost. Standard costing, normal costing, actual costing like that. Coming back to the MCQs, go through question number 178. Which is not a benefit of normal costing, which is not a benefit of normal costing. Which is not a benefit.
Sir, is it D?
Which is not a benefit. Smoothing of product cost throughout the period, no. It is not smoothing the cost. There is nothing to do with smoothing the cost because everything we take it at actual rates.
Okay.
See, I would say the limitation could be improved accuracy of job and product costing. It is not possible because material labor we take it at actual rate and over it still we apply which one? Predetermined rate for actual production. So there is a limitation. Okay, they are using a standard costing system. 179, they are using a standard costing system. They ask you to find out direct labor traced to the units manufactured.
$4 lakhs.
It is based on what is allowed. It is based on what is allowed.
Allowed.
Okay. What is allowed here? 10,000 units. I hope for 11,000 units, if it is 22,000 hours, it is like 2 hours allowed. 2 hours allowed per unit. So 10,000 into 2 hours into 20.
20.
4 lakhs. Right. What is allowed? Based on what is allowed? Predetermined rate. 10,000 units. 2 hours allowed into 20. Machine hours for allocating overheads. Manufacturing overheads, machine hours, etc. is given. They ask you to find out amount of manufacturing overheads allocated to the job schedule.
Options, sir. $240.
How 240?
Actual costing.
Using actual costing. Good. Directly hits the answer 2,40,000. Actual costing, we don't see any predetermined rate and other things. Just
Yes.
based on the actual cost, the overheads are charged. 2,40,000. Normal costing system. Indirect cost rate.
So is it 12 lakh divided by 50,000?
12 lakh divided by 50,000. What is 12 lakh divided by 50,000? You get
12 lakh,
48. So they ask you to find out indirect cost rate. Indirect costs are 12 lakhs divided by, okay, 12 million divided by 50,000. 12 lakhs divided, okay, 12 lakhs divided by 50,000.
Okay.
12 million divided by 50,000, you get what? 48. Advantages of standard costing system, except, what is the exception?
Qualitative characteristics.
It will not give you any what? Qualitative characteristics. There is no qualitative characteristics attached to which one? The costing systems.
Okay.
Standard costing system most often used by a firm which is manufactured in conjunction with.
Flexible budget.
Yes. Because based on the standard cost, we work out which one? Flexible budgets. Which one of the following is a variance that could appear if the company uses normal costing system? Material and labor, we take actual rates. Material and labor, we take which one? Actual rates.
Spending.
Overhead spending variance is possible because overheads alone we take it at a predetermined rate for the actual hours. For the actual hours, spending variance can come. So this equivalent production concept is not covered. Remove it. What is the primary objective of process costing?
Process costing. Allocate cost.
Yes, completed and incomplete units, we allocate the cost. Conversion costs are, what is the conversion cost? Yes, all the costs incurred to convert the raw material into finished product. Equivalent units is not there. Equivalent units is not there. Companies characterized by production basically homogeneous products will mostly likely to use which of the following method?
Process costing.
What do you mean by homogeneous products?
Same.
Same products. Same products, they will apply which method? Process costing system. Single product with a minimal defect rate. Continuous flow cycle. Job costing is based on the instruction given from the customer. There's a continuous flow cycle. Okay, simple. This will be also which one? Process costing. When considering normal and abnormal, which of the following spoilage should be accounted in manufacturing? Yes, normal spoilage will be charged to good units. Okay, that will be borne by the customer. Unavoidable losses will be borne by the customer. Abnormal losses are charged in separate P&L account. Separately in which account? Profit and loss account, that is income statement. Abnormal spoilage is not expected to occur under efficient operation conditions. Abnormal losses will not come when there is an efficient production. Abnormal spoilage cost is charged to which account?
Special loss account.
Yes, special loss account, or you can say it will be charged to P&L account. Process costing. Continuous flow. Newspaper builder, road builder, electric contractor, paint, printer and all, they will apply maybe job costing. Abnormal spoilage, what to do?
Charge to special loss account.
In a process costing system, cost of abnormal spoilage is
Treated as loss.
treated as loss. When compared to normal spoilage, abnormal spoilage is
Option B, sir.
yes, it is controllable. Normal spoilage unavoidable, but abnormal spoilage you can avoid it. Job order costing system is given. Direct material purchased, direct labor used is given. Direct labor incurred, overheads applied is given to us. Beginning was 1500, completed job number 101 in August 1. The customer has paid 5,000 for the job 101. How much the company should report as which one? Cost of goods sold in job 101 kit. This much is incurred in the current year. This much is incurred in the current year. What is the total cost incurred in the current year? 450 plus 350 plus 50. What is the total cost incurred in the current year? 850. We had beginning inventory of how much? 1500. Ending inventory is not there because it is finished and transferred to the customer and customer paid the money. So 1500. So 850 plus 1500. What is the total? 2350. There is no opening WIP, there is no closing WIP. Okay, so cost of goods manufactured is given to the customer. There, current year we spent 850. Already we have spent 1500. Total of 2350 we have spent. At the end of the period, there is no, ending inventory. Read this. Wide range of clients, including manufacturing, restaurants, and service businesses, etc.
Process costing.
Is it process costing? It's an advertisement agency. Are they doing the same production flow?
Okay. Job order.
It will come under which one? Job order
Job
costing.
order.
It will come under job order costing. A shipbuilding company employing 30 workers, construction, custom built
Job order.
yachts. Customized work, job order costing. Heterogeneous. Homogeneous means process costing. Heterogeneous means different products based on the instruction given by the customer will come under which one? Job costing. That will come under job costing. Correctly classifies.
Oh, only one.
Wallpaper manufacturers, okay, they have got their own standardized designs only. Wallpaper manufacturers, they also follow process costing only. Aircraft assembly can be job costing, but process costing they don't follow. Public accounting firms also follow job costing. Paint manufacturers follow process costing. Retail banking, they follow service costing. Yes, I hope it is print shop. depending upon your instruction, heterogeneous products are manufactured. Continuous production process like Pepsi and Coke, okay, you find the continuous production flow will be there. That is process costing system. I hope answer is A. You know. Job costing is more suitable for whenever there is a specific order given, according to that instruction we make it. Directly this has answer. Determining cost of a specific project. Because project by project, it will have different property, different consumption of material. It is not a standardized one.
Mala.
Life cycle costing.
Option B, sir.
Option B or D?
B.
We don't know. We don't include only manufacturing cost. Life cycle costing, like even pre-production cost like R&D cost, etc. is included.
Okay.
So this says only manufacturing cost, selling and distribution expenses. No. Life cycle costing, everything is included.
Okay.
It is there's no such thing like savings opportunity. It is not we are including only manufacturing cost. It is not this. Okay, answer is C. Okay, we see the total life cycle cost divided by estimated number of units over the life cycle, and based on that we fix the price of the product. Like how much we spend on R&D plus what is going to be the manufacturing cost over 5 years. Okay, we accumulate everything divided by total number of estimated units to be produced and sold over the life cycle. So that is used for cost planning and which one? Product planning, product pricing. Life cycle method costing. Is it focused on customer? Is it cost identified in the value chain? Okay. Examining various aspects of products, identify the cost efficiency. No. A method of costing that minimizes selling expenses. No. Actually, this should be the correct answer.
Value.
All the costs that are incurred in the value creation, right, from R&D to distribution.
Job order costing.
Consulting engagements vary widely from hospital to hospital, which means it is customized. Job order costing.
Job order costing.
Each loan is separate. Each loan is separate. So they will go with which one? Job order costing. They will go with job order costing. You tell me.
Upstream.
No such thing. It is included in production process cost.
Upstream, downstream, research and development.
It will be like a production process cost. Before the production happens, what is incurred? Upstream cost.
Sir, and the
Correct.
upstream manufacturing.
Upstream cost. Correct. Upstream cost. Normal spoilage is 4% of the units passing inspection. So not total units. good units passing inspection, that it will be taken at 4%. It will be taken at what? 4%. Should work out this 4% not on 30,000, on 28,500. How much you get?
360.
This into 4%. How much you get?
367.
No, 28,500 into 4%. 28,500 into 4%.
1,140.
1,140. But what is the actual spoilage given? 1,500. So difference we call it as abnormal. Okay. Abnormal spoilage is like 360. 360 is like abnormal spoilage. The 1,500 requires 20.25 direct labor per unit to rework into good units. Ketrika. What is the proper charge of loss from abnormal spoilage account? Ketrika? So we are going to spend 0.25 direct labor hour per unit to make it as what? Good units Ketrika. So 0.25 direct labor hour, which means labor cost 16 based on labor hour. This is 30 based on labor hour. This is 30 based on labor hour. So 16 plus 30, what is the total? 46 into 0.25 labor hour. 0.25 labor hour, now 46 into 0.25 labor hour.
11.5.
11.5 per unit into abnormal defectives. What is abnormal defectives? 360. That will be charged to P&L account. That will be charged to income statement. 11.5 into 360, how much you get?
4,100.
So it's a defective rectification cost. The reason is abnormal cost should not be borne by the customer. Abnormal cost should be borne by the company. Abnormal cost should be borne by the company. So the defective rectification cost or whatever, that will be charged to P&L. $4140. Designed to meet the product of each customer's specific needs கொடுத்திருக்காங்க. So customized work will come under which one? Job order costing. Heterogeneous, unique work will come under which one? Job costing system. All of the following represents trends in a way in which indirect costs are allocated, except கேட்டிருக்கான். Throughput time is the processing time. Okay, that is okay. Indirect cost can be allocated using this. Exception to the allocation of indirect cost. See, point number A, you look at preferring a corporate wide application rates that are applied to machine hours rather than incurring the cost to detailed allocation, which means for the entire company you work out a single rate or single base. Based on that, you allocate the cost. That is an exception. That is not the way in which the overhead should be allocated or indirect cost should be allocated. Two and two par. Variety of handcrafted products. Handcrafted rocking chairs.
Direct labor.
So it's given handcrafted. More labor would have been used. So better to go with what? Labor hours. Predetermined standard overhead application rate 13 is given. Spending variance unfavorable. Variable overhead efficiency variance, unfavorable is given. Favorable, everything is unfavorable.
So C level question, sir.
பரவாயில்ல பார்த்துக்கலாம். Standard direct labor hours allowed for actual production is given. Actual hours worked is given. Direct labor hours, 8 labor hours per unit is given. They ask you to find out what is actual production units and budgeted production units கேட்டிருக்காங்க. Simple, 6,400 direct labor hours divided by 8 hours allowed means this is the standard, this is the,
8.
how much you get?
8.
800 units. Actual direct labor hours used is given to us. Look at this, what is a predetermined application rate? 13 கொடுத்திருக்காங்க, 13 கொடுத்திருக்காங்க. Efficiency variance is how much? 1600 favorable, 1600 favorable கொடுத்திருக்காங்க. So try to work out. So we have to go with what is available now. Of course, it is related to C, we will work out. Section C, we will work out, okay. Variable overhead efficiency variance. How to work out variable overhead efficiency variance? Actual hours minus standard hours into standard rate. Into standard rate will give us is 1,600. 1,600, yeah. We know actual hours. What is actual hours?
6,000.
6,400. 6,000. Minus standard hours, ever
6,000.
into standard rate, we do not know.
So random same number. Right?
When you solve this, you will get the standard rate. Standard rate, how much you get standard rate?
Minus 400 by 4.
Minus 400, 1,600 minus divided by 400, it will give us what? 4.
4.
4 per hour. So this is your rate of variable overheads. Variable overheads. Standard rate 4 per hour for variable overheads. It's given total overhead application rate is 13. Total overhead application rate is 13. Minus variable overheads will give us fixed overheads. What is the fixed overheads? 9. Fixed overheads application is 9. So we worked out fixed overheads 9. Then it is given fixed overheads production volume variance. Volume variance is because of the quantity. It is because of which one? Quantity. What would have been the standard fixed overheads? Standard fixed overheads would have been like we worked for 6,400 hours into 9. What is 6,400 into 9? Standard fixed overheads.
57,600.
54,600. How much?
57,600.
57,600. The variance is, what is the volume variance? Fixed overheads volume variance, how much is given?
938, sir. 800 units and 938, sir.
Let us see. 14,400 is volume variance. Unfavorable. Unfavorable nu kuduthirukka. Therefore, it should be 72,000. It should be how much? 72,000. Volume variance unfavorable, which means we would have planned 72,000. So 72,000 into, okay, 72,000 divided by how many hours? Divided by this. How do we get this 72,000? It's like units into hours into rate. We get this 72,000. We know units, we do not know. Hours, we know. What is hours? What is hours? 8 hours per unit. 8 hours per unit into what is the rate per hour? 9. This is equal to 72,000. So how many units? So 72,000 divided by 72 will be 1,000 units. Right, standard fixed overheads are like 6,409. Volume variance of 14,400 adverse, which means we would have planned for 72,000. This is for standard output into hours into rate. We know units, we do not know, but our standard hours are like 8 hours into 9 rupees is the $9 is the standard rate per unit per hour. Okay, 72,000 we get. So number of units will be 1,000 units. What is the correct answer? You can cross check also. How many units variance? 200 units variance into how many hours? 8 hours into 9 rupees. Apply panni parunga. Production volume variance are we getting? 14,400. That is what is given. Unfavorable because we budgeted 1,000, actual is only 800. So 200 into 8 into 9, that is what is 14,400 given. But this also you can work out directly. 14,400 unfavorable is given. Okay, if it is 8 into 9, so how many units like that we can work out? Same thing is given. They ask you to find out under or over applied fixed overheads. Under or over applied fixed overheads. Already we worked out number of hours. Already we worked out fixed overheads rate. Already we worked out what? Fixed overheads rate. What is fixed overheads rate? 9. Fixed overheads rate is 9. Think and work out and tell me. Simple, they ask you to find out total fixed overheads variance. It's nothing but spending variance plus volume variance. What is spending variance in this question? What is spending variance? 4320 plus 14400. How much you get? 18320 we under applied.
Sorry, 18,720.
18720 under applied. They ask you variable overheads, over applied or under applied. What is the net? Spending variance 8000 unfavorable. Efficiency variance 1600 favorable, means 6400 unfavorable. Which means we have under applied those overheads. We under applied those overheads. Applied overheads are lesser than what? I mean, what is allowed? Multiple department overhead rates are considered as preferable for a single plant-wise overhead rate when department overhead rates are considered as preferable to a single or plant-wise overhead rate when think. We want to go for departmental rates to a single rate. Instead of applying for the whole plant a single rate, department wise we want to go for it.
A.
Think.
A or B, sir.
Think.
Cost driver is same na B.
No, it's not cost driver same. Multiple department overheads are considered preferable, means for each department we are applying separate overhead rate instead of going for what? Overall plant.
Okay.
We want to use each department, each production process a separate overhead rate instead of applying which one? The overall overhead rates. Instead of applying the overall overhead rates.
A opposite, sir.
Opposite. Answer is C. Various products are manufactured that do not pass through the same department, use the same manufacturing technique. Which means there are different products which are being processed in different departments. So better to go with what? Departmental overhead rates. Total budgeted overheads are given. Then read further. Direct labor hours are given. For the job, it is 12 hours and 3 hours given. The question is, divide and tell me the rate per hour. $8625 divided by 460. What is
18 point.
18 point?
Sorry, sir. One minute.
First one. 8625 divided by 460.
Six.
18
25 divided by
Divided by 460. 18.75. For the other one, 16,120 divided by 620.
26.
26. Then for this job, multiply these two. 12 hours into 18.75 plus 3 into 26.
3 not T, sir.
Right, 12 into 18.75, 3 into 26, 303. What are the important factors for budgeting manufacturing overheads? For budgeting manufacturing overheads. It is not contribution margin, it is not sales, or it's not machine hours and production value. I hope D is correct. The management should judge what influences the overheads. Is it number of hours, machine hours, or labor hours in the money, and what is the production value which we want to achieve. 219.
A.
Departmental overhead rates are usually preferred to a corporate single overhead rate when activities are what? Not homogeneous. Activities are different. Activities are different. The most important criteria for accurate cost allocation is, what is the most important important tool for cost allocation? Yes, ensure that common costs are, I mean, totally taken care. Common costs are totally separated, or have a separate cost pool for each uniform cost or homogeneous cost, like that. So department A and B, they have given. Budgeted manufacturing cost is given. Direct material, direct labor and manufacturing support is given. Actual cost is given. Direct material, labor, 8,000, 12,000, 20,000 is given. Okay. They ask you, they are assigning based on direct labor cost. Based on direct labor cost. So tell me, what is the direct labor to this?
1:4.
So which means based on direct labor, it is 1:4. It is what? 2:1. 2:1. So when you allocate it for department A, it will be like 8,000 into 8,000 into, if it is, no. You should see manufacturing support to direct labor. Manufacturing support to direct labor. This into 6/2. 6/2. And
Yes, 6/2.
because we are calculating which one? Overheads. Overheads are 3 times of, look at this. Overheads are 3 times of labor. So this is a labor. So what will be the overheads? 3 times it will be. So it will be 3 times. That's why 6/2, or you can put 3 times. How much? 8,000 into 3? 24,000. For the other department, overheads are half the direct labor, which means department B, 12,000 into 0.5. 12,000 into what? 0.5. 6,000. So 30,000 will be the total overheads. They ask you total cost. They
So the
ask you to,
manufacturing support மட்டும் தானே சார் கேக்குறான்.
இல்ல, they ask you to find out total cost associated with the job. So material plus labor plus overheads. Material 25,000, labor 20,000, overheads 30,000. What is the total cost?
75,000.
How much? 75. Material plus labor plus overheads. Do you understand overheads application?
So below.
Look at this direct labor to overheads relationship. Direct labor is 2 when overheads are what? 6 means 3 times. Overheads are 3 times of direct labor. So 8,000 into 3 times. Here, overheads are half of the direct labor, 50% of direct labor. For department B, overheads are 50% of direct labor. So 30,000. So 25 plus 20 plus 30, 75,000. Done?
Yes.
Two departments. Departmental low machine hours for machine department. For machine department, they work out manufacturing overheads divided by machine hours. For assembly, they work out based on direct labor hours. 20 lakh divided by 2 lakhs. So they ask you what is the rate? What is the rate?
100.
Second one,
100 and the other one 10.
what's the
10 and 100. I hope answer is
D.
estimated cost, estimated labor hours, actual cost, actual hours is given. Based on this information, factory overheads is
15,000
think.
sir.
Tell me how to work.
5 lakh divided by 2 lakh, 2.5.
5 lakh divided by 2 lakh, it will give us what? 2.5. Okay, then
Into actual labor cost,
into 2.5, how much you get?
5,25,000.
This is the applied overheads. This is the applied overheads, and 5,15,000 is the actual overheads. So we over applied. Applied overheads are more than actual overheads. So over applied by 10,000. Correct. Over applied by 10,000. This is not covered. Equivalent production is not covered. Equivalent production method is not covered. Go to 225.
Cause and deviations.
Indirect costs are grouped to cost pools, then allocated by a common cost allocation based to the cost object. Okay. What is a cost and relationship? Like, is it influenced by number of hours, labor hours, machine hours, material, like that? Wood screws and glue used in the production of school desks will be most likely be classified as
Factory overhead.
indirect material, indirect labors are part of which one? Factory
Factory
overheads. 227.
Same question, sir.
Hmm. Repeated. Standard costing system uses everything standard. Material, labor, overheads, everything is based on predetermined thing.
Option
1 minute. Same facility. Controller of the company has decided to accumulate budgeted overhead cost for manufacturing facility to a single cost pool. The cost pool then allocated to 3 products of direct labor hours using each product. Which type of overhead rate is most likely to be used for the
absolute.
Environmental.
the products are all manufactured in the same facility. They are going to assign into a single cost pool, means not departmental wise. Then allocated to the 3 products based on direct labor hours. So they are going to work total overhead cost divided by total direct labor hours, like that. Which type of method they are going to apply in the allocation methodology? They are not asking you which is the best method. Which method this particular controller is using to allocate the overheads? Corporate wise rate. Is it given that department wise he calculates overheads? Department wise he calculates overhead rate and assigns? No. Common cost pool we we accumulate overheads divided by total labor hours, then we assign to products. Which means this controller is using which one? Corporate wide rate, not a department rate. Indirect and common costs. Indirect and which one? Common costs are often made up with a significant portion of the cost of the product. all of the following reasons for indirect cost allocation to cost except. Where do we allocate indirect cost? Okay, the reason is, what is exception? Measure the income, provide information, justify cost reimbursement purposes, everything is correct. This is not possible. This is not possible just by assigning what? Indirect cost. Indirect costs, whether you assign or not, whether you allocate or not, they are continue to be spent. So the reason for assigning the cost or allocating the indirect cost is not to reduce the cost. Decides to focus on manufacturing capacity rather than output demand. To derive a realistic application rate, the denominator level activity should be
Normal capacity.
no. They want to decide
Realistic na
focus.
practical as
Realistic na. A realistic application rate should be based on practical capacity. What is practically possible in the world? They ask you to find out overhead cost, only overhead cost. Manufacturing process requires usage of machining equipment, which is the primary driver. Actual factory overheads are amounted to how much? 450.
450.
So 2,20,000 divided by 20,000, it will give us rate per hour. What is the rate per hour? 11 into the machine hours worked. 32 into 11.
352.
32 into 11, 352 is the applied overheads. Applied overheads are 352. Actual overheads
450.
450.
98. Over applied.
98
Over applied.
thing. We applied only 352. We applied only 352.
Oh, under applied. Sorry. Actual is more.
Be careful. Under applied.
Now calculate 352 minus 450.
Okay. So it is under applied. Read the next one. A company planned to produce 5,000 units with 5 lakhs of manufacturing overheads. The company actually spent 5,05,000, producing 49,000 units. Using 99,000 hours. Okay. Under the standard costing system that allocates overheads based on machine hours, the manufacturing overheads traced to the product will be in standard costing. What is allowed we will see.
Allowed for this units then, sir.
Allowed for this units will be like for 5 lakh, if it is 50,000 units, what is for 49,000 units? Should be 4 lakh.
540. Sorry.
4 lakh 90. Overheads are allocated based on predetermined rate in standard costing system. For 49,000, how much is allowed? 10 per unit into 49,000, 4,90,000. It doesn't matter.
15 into 2 then, sir. 100
Based on the output then
machine hours, sir. Based upon machine hours. Per unit வந்து 2 hours போட்டு, sir. So 50,000 and 200, 500.
Even if you do that, it will come the same.
49,000.
49,000 into Two machine hours now 1 lakh
45.
1 lakh crore. This will be into 49,000 into 2 hours. Allowed. What is allowed? Standard costing is always based on what is allowed. Divided by 1 lakh hours multiplied with 49,000 into 2. That is 98,000 hours.
245.
Same thing will 5 lakh divided by 1 lakh hours. That is 50,000 into 2. Yes, you divided by 2, multiplied by 2, same answer.
Wow.
Let us see the question. Allocating the overheads based on direct labor hours. Based on direct labor hours. This is a repeated one, kind of a question. Divide this, you will get the rate per hour. Divide this, you will get the rate per hour. 8690 divided by 440. 8690 divided by 440. How much you get?
19.75.
How much?
19.75.
And the other one? 14,080 divided by 640. 14,080 divided by 640.
20.
So multiply 19.75 into 10
7.
plus 22 into 2.
241.5.
What is the answer? 241.5.
So, where do two department?
Oh,
Purila.
44, sir. Right side then is
Oh
tooling
my God,
department.
correct. Only for tooling department, this 2 into 22, 40.
Right side then is tooling department.
Left
Left
side,
side.
left side.
Okay. 197.5.
$197.5. It's a similar question. 2 lakh units. Each unit requires 2 standard hours. Budget is 9 lakh. Overhead rate is estimated at 3 per unit is given. Both fixed and variable assigned based on direct labor or actual data is given. Actual units are given, actual hours are given, actual variable overheads, actual fixed overheads are given. They ask you to find out fixed overheads applied cater. Fixed overheads applied cater. Think. The fixed overhead rate was estimated to be how much?
3
3 per hour or 3 per unit?
per unit, sir.
3 per unit. So what is the actual production?
198.
198. Estimate is 3 per unit. So applied would have been 198 into 3. 1,98,000 into 3. They ask you only about fixed overhead component.
Option D, sir.
1,98,000 units into 3. How much?
594.
590. The question is only about fixed overheads. The question is only about fixed overheads. Calculate. Only one product is given. Predetermined factory overhead rate application for variable overheads they ask for. Variable overheads they ask for.
இதெல்லாம் variable.
Whatever varies with production. This 1,000, this 10,000.
That's all.
Right. What is the variable overheads? Utilities to operate the factory machines may be changing with output. Security lighting, general expenses and all will be fixed. So what is the total?
23.
1,000 plus 10,000 plus 12,000, how much? 23,000. 23,000 divided by, what is the budget?
11,000.
So answer is 23,000 divided by 11,000.
0.9.
Variable overheads divided by 11,000. How much you get? 23,000 divided by 11,000 variable overheads 2.09.
0.9.
2.09.
Sorry, 2.09.
Only the variable overheads they ask you to consider. Question number 237 part. Units of production is appropriate only when you manufacture only one type of a product. 238 part. Variable overheads over applied எவ்வளோன்னு கேட்டிருக்கு. Over or under applied variable overheads. Spending variance is given unfavorable. Then spending variance கொடுத்துட்டு unfavorable னு கொடுத்துட்டாங்க. Then read through. This is total overheads or variable overheads?
Variable. Oh.
Variable overhead application rate is given 7.5.
So efficiency.
Variance is not given. Variance is not given. So how much? 37,000 into 7.5 போடுங்க. 37,000 into 7.5 you apply.
Standard labor cost minus பண்ணணும்.
2 lakh
77,500.
2 lakh 77,500. 2 lakh 77,500 கொடு. It's based on the standard rate. இதில் spending variance எவ்வளவு கொடுத்திருக்காங்க? What is the spending variance given? What is the spending variance given? 16,650.
Minus that.
Unfavorable. You would have spent more.
Oh,
You would have spent more. Unfavorable. You would have spent more. This will give us actual expenses. Actual variable overheads. 2,77,500 is the
So
variable overheads
actually
allowed.
270 plus 16,650 போட்டாலே வந்து
277,500 plus 16,650.
Sir, actual now வந்துட்டு flexible budget for variable overhead இருக்குல்ல sir. அது plus variable overhead spending variance add பண்ணாலே வந்துருல்ல sir.
இல்ல 37,000 hours worked into 7.5 போட்டீங்கன்னா you get 2,77,500 இல்ல. So this 2,70,000 we do not know what is that flexible budget. That is based on number of units. That's based on number of units.
Okay.
So this is based on number of hours. Plus we spent 16,650 extra. This could have been the actual variable overheads. What is actual variable overheads? Tell me the amount.
1 second sir. 16,650. 294,150.
Okay, 294,150 is the actual amount spent. Maybe what you are telling is correct. What is allowed? Flexible budget is what is allowed. 36,000 into the 7.5. 36,000 into 7.5 is what is allowed. 36,000 is
Efficiency தான் sir இது எடுப்போம் standard hours.
see, standard hours allowed for actual output is 36,000. That is what is flexible budget. 36,000 into 7.5. 36,000 into 7.5.
2 lakhs.
That is what is this 2 lakhs. This 2 lakh 70 is nothing but standard allowed for actual output. That is flexible budget. This is what is this 2 lakhs. So difference, the actual overheads are more than allowed overheads. Actual overheads are more than allowed overheads. Underapplied. How much underapplied?
Sir,
24,150 underapplied. Answer is
P. லைட்டா தலை சுத்துது sir. ஞாபகமே இல்லை sir இதெல்லாம்.
we'll see. Fixed overheads. அதை வச்சு work out பண்ணுங்க. Try to work out fixed overheads.
So 1,47,000 difference.
1,47,000 now. No, think. What is the budgeted fixed overheads given? 6,30,000 is given. This divided by budgeted hours. By budgeted hours will be like 5,000 into 60. 5,000 into 6. So it will give us a rate per hour. What is the rate you are getting? 6,30,000 divided by 30,000. 6,30,000 divided by 30,000. How much you get?
21.
22, sorry, 21.
21 per hour. So how many hours what is the standard hours allowed for actual output?
36.
This is what would have been applied. This into 21. This into how much? 21. 36,000 into 21. We would have applied the factory overheads. How much?
396.
36,000 into 21.
Oh, sorry.
36,000 into 21. How much you get?
7,56,000.
7,56,000 is the applied overheads. Applied means overheads charged to production. What is the actual overheads incurred?
6,00,000.
Applied overheads are 7,56,000 applied. This is over applied. How much over applied?
1,35,000.
Over. So overheads actually incurred. This is the overheads which is applied means charged based on the predetermined rate. Charged based on the predetermined rate. So difference is what? Over applied. Difference is over applied. Same question. What is the actual production units? They ask you what is the actual production units. Simple one line answer. What is hours allowed?
6.
What is the hours allowed for actual output?
36
So
divided
36,000 divided by 6.
6,000.
6,000 units. Right? Hours allowed for actual output 36,000. Okay, per unit 6 hours allowed means what is the difference? What is the number of units? 6,000 units. 6,000 units. $241. Answer it.
$48.
How did you get 48?
Divided by
12 lakh divided by 25,000. Get 48. Direct answer. 242. based on direct labor hours. Material handling cost allocated to 1 unit they asked for. See, equal units are produced and equal number of hours are also there. What is the total number of units made? 50 units into 200 hours. It will be how much? 10,000 hours. 10,000 hours. So what will be the rate per hour? 50,000 divided by 10,000. How much? $5. Then they ask you to find out what is the cost of one thing.
5 to 200.
200 into 5.
1,000.
200 into 5. Let it be first or second. 200 into 5. How much it is? 1,000.
Sir, the 50 by 200, 15 to 200 total.
Unit produced is, or you can work it separately also. 25 into 200 plus 25 into 200.
Okay.
25 into 200 plus 25 into 200, 10,000 hours. Otherwise, total units produced is 50. Per unit, it is 200, 10,000. 50 units into 200. Otherwise, you can multiply separately and add. So 5 into 200, 1,000. 5 into 200, 1,000.
Okay.
They've given finished goods opening and closing WIP, direct material purchased, purchase returns and allowances are given, transportation in is given, direct labor, actual factory overheads are given. Factory overheads are applied at the rate of 60% of direct labor cost for the record. So 3 lakh into 60%. Oh, 3 lakh, they ask you to find out total manufacturing cost. They ask you to find out total manufacturing cost. So try to prepare a cost sheet. Try to prepare a production cost statement. Try pannu. Raw material will be opening stock plus purchases minus closing stock. Raw material போடும்போது opening stock plus purchases minus closing stock minus purchase returns and minus transportation in போடும். Opening stock plus purchases minus closing stock minus closing stock. Yes.
6,61,000.
Okay, plus direct material purchase plus minus purchase returns minus transportation in. So what is the raw material consumed?
2,01,000.
2,01,000 raw material consumed. Direct labor cost.
3 lakhs.
Direct labor cost given in the question 3 lakhs. So prime cost 5,01,000. Prime cost is 5,01,000. Add factory overheads. How do they apply the factory overheads?
60% of direct labor.
60% of direct labor.
1,90,000.
So this will give us production cost. Otherwise, we can call it as total manufacturing cost. They don't ask you cost of goods manufactured. They ask you total manufacturing cost. Don't adjust WIP. How much it is? 6,81,000 is the total manufacturing cost. This is the total manufacturing cost before adjusting WIP. Answer is 6,81,000.
Okay. So the 201 material, sir.
Raw material consumed, opening stock of material plus purchase of material minus closing stock, minus purchase returns, add transportation,
189 plus 10,000, sir. 193.
199.
Oh,
Oh,
purchase.
purchase.
Okay,
Okay,
okay.
okay.
Minus
Minus
போட்டோன்னே
போட்டோன்னே
நானும்
நானும்
போட்டுட்டேன்.
போட்டுட்டேன்.
Answer
சரி
வரல பார்த்தேன். Okay.
2,00,000. So prime
The
cost is
freight then automatically add ஆயிருக்காது sir already purchase
no,
இருக்கா?
purchases on it. Freight in is just a transportation cost in that is separate. So prime cost is 5,01,000. So total manufacturing cost is 6,81,000. Same question. They ask you to find out cost of goods manufactured. We worked out 6,81,000 work out பண்ணிருக்கோம். That is your total manufacturing cost. Total manufacturing cost how much? 6,81,000. Add opening work in progress. Opening work in progress எவ்வளவு இருக்கு? 2,35,000 less
Ending
closing work in progress. What is a closing work in progress?
251,000.
This will give us cost of goods manufactured.
16,000 minus 1. 665.
6,65,000 cost of goods manufactured. Answer is A. Of the same question, they would have asked B cost of goods sold. The cost of goods sold, add opening WA finished goods minus closing finished goods. So 6,65,000 add opening inventory minus closing inventory finished goods.
8,000. 72.
6,65,000 plus 1,25,000 minus 1,17,000. How much you get?
673.
6,73,000 cost of goods sold. Go to 246.
One 140.
How 140?
70 by 10,000. 7 per hour.
$70,000 divided by
Total hours வந்து 50,000 கொடுத்திருக்காங்க. Divided by 5 per hour னா number of hours வரும்.
50,000 divided by 5 per hour. Yes, you get 10,000 hours. 70,000 divided by 10 will give us
7 into 20 is 140.
so for this product 20 into 7. What is the correct answer? B. $247 per. Total cost that will be charged per production run. Overheads
8,000
plus
plus
100% of direct labor means
400
8,000, right?
plus 400
Raw material 20% of raw material means plus 400. This will be 140 into
16,380.
how much you get? 140 into 117.
16,380.
So
24,780. அங்க அதுவே இல்ல.
they ask you to find out overheads or total cost.
Total cost.
Total cost means which will include both direct material and direct labor also. Should include this 8,000 and 2,000 also.
Oh, plus 10,000. Okay. Damn.
This also should be included. So 8,000 plus 2,000 plus 800 plus 400 plus 16,380. What is your total cost?
34.
34,780. Material plus labor plus all the overheads, 34,780. It's a repeated one. Individual department rates are better for applying overheads because, okay, different resources are consumed. Inventory at 4.3 கொடுத்திருக்கா. So they ask you what is the budgeted unit schedule. A total of 15,000 hours were budgeted. 150,000 machine hours were budgeted. An order of 1,000 units were completed and incurred. The following is given to us. So what is the material cost per unit? 1,000 by 1,000, 1. What is the labor cost per unit? 1,500 divided by 1,000, 1.5. 1.5. So how much gone? 2.5 gone. So from 4.3, 2.5 gone. 4.3 minus 2.5 will be 1.8 is the overheads. 1.8 per unit is the overheads. 1.8 per unit is the overheads. So for the 1,000 units, what would have been the overheads?
1,800.
1,000 into 1.5. 1,800. It is for how many hours? This is for how many hours? 450 hours. 1,800 divided by 450 pota, you will get per hour. How much per hour?
$4.
$4 per hour. For the factory, 150,000 machine hours planned in the solra. So it will be 150,000 into 4. This would have been the planned overheads for the entire factory. So material $1, labor $1.5. So 4.3 minus 2.5, we get overheads 1.8 per unit. So 1,000 into 1.8, 1,000 into 1.8, $1,800. $1,800 divided by 450 hours, we get per hour. So for the factory as a whole, 1,50,000 into annual budgeted fixed overheads. 1,50,000 into 4, 6 lakhs. Go to question number 250. It's a similar question. Anyway, let us work out. They ask you to find out manufacturing. Simple. Direct material opening stock plus purchases minus closing stock.
Is 163. Plus
Transportation in. What is the total you get? Opening stock plus purchases.
87.
How much? 180?
7.
Okay, add direct labor. 2 lakhs. You get prime cost 3,87,000. Factory overheads are 70% of your direct labor.
17, sir.
70% of.
Okay.
Oh, purchase returns are given. Minus 2,000 put. Purchase returns are also given.
Okay. 185.
180.
385.
385. This is 70% of labor.
Uh,
3,85,000 plus 1,40,000. 3,85,000 plus 1,40,000.
98, sir.
How much?
Oh, sorry.
Direct, see, direct material check பண்ணுங்க. 67,000 plus 163 plus 4 minus 2 and minus 62 போடு பாருங்க. Check it.
ஒரே நிமிஷம் sir. 67 minus 62 is 5 plus 4 9 minus 2 7 170 sir.
So add பண்ணா 3,70,000 plus 1,40,000, how much you get? 5,10,000 is your manufacturing cost. It's not cost of goods manufactured, it is manufacturing cost. I hope they ask you only the manufacturing cost. 5,10,000. 5,10,000.
Cost of goods manufacturing is different sir.
Without adjusting WIP. Current cost we spent, we
Okay.
call it as manufacturing cost. Here I hope they would have asked cost of goods sold. They would have asked which one? Cost of goods sold. Same working, manufacturing cost. Add opening WIP minus closing WIP. Add opening WIP 1,45,000 minus closing WIP 1,71,000. This will give us cost of goods manufactured. What is cost of goods manufactured?
522.
522 is cost of goods manufactured.
So ஒரே நிமிஷம் sir. Calculated வந்து போட்டுறேன்.
5 lakh. Let's check.
1 Oh
Plus
yeah.
125 minus 171.
Minus 26 sir.
4,85,000. Okay. Plus opening finished goods 85,000 minus closing finished goods 78,000 will give us cost of goods sold. 7. So it will be 4,91,000. That is your cost of goods sold. Answer is find out cost of goods sold. 4,91,000. Four lakh 91,000. $252 per. So, 252 per issues. Full absorption costing, standard costing system. Full absorption costing and which one? Standard costing system to account for production cost கொடுத்திருக்காங்க.
Standard as allowed for the actual units into standard factory overhead rate.
Answer is C. Standard allowed for the
The
units
actual.
manufactured.
Sir, normal line number, sir, I forgot.
Normal costing system, they assign based on what? What is actually consumed? What is actually consumed?
Actual standard.
Overhead allocation, actual used for actual production. Actual used for actual production. இது standard allowed for actual production.
Oh.
Which one is not the appropriate cost allocation base for an organization?
Supervisor salary.
There is no such cost allocation. First read the situation, then let us see. Direct laborers, they applied overheads to product. They did a renovation and modernization program for 2 years. The management processes were re-engineered and considerable automated equipment was acquired. 60% of the company's non-union factory workers were terminated. Which of the following statement applied to the situation?
Not two.
Renovation and modernization definitely would have increased what? Factory overheads.
Not two, not
Direct
three.
laborers seem to be appropriate. No, it is automated. Henry will lack ability to properly determine labor variances. No.
No. Will be more accurate.
Henry is
One
likely to
and
reduce ability to quickly cut the cost in order to respond to which one? Economic downtowns.
Yes.
Yes.
One
So
and
answer is what?
and B.
1 and 4 only. The amount of arrows applied kit.
Applied na standard allowed for actual.
Which costing method they follow? Based on planned machine hours using a predetermined annual rate.
Standard.
Predetermined annual rate. What is the rate?
Or April. 1 lakh.
12 lakh divided by 2 lakh 40,000. 12 lakh divided by 2 lakh 40,000.
5
Fine.
into actual hours. Not actual. Standard allowed for the actual. 21 so 105 so
There is a variable manufacturing overheads also. So
total hours.
total எடுத்துக்கலாம். Because everything is based on annual predetermined rate. So 36 lakhs divided by 2 lakh 40, how much you get?
15.
15 into 21,000. 15 into 21,000.
15.
Answer is 315. என்னாச்சு?
தெரியாம exam book பண்ணிட்டேன் sir.
Okay. Next. Same question.
என்ன கேட்டிருக்காங்க?
The company applies overhead based on planned machine hours using a predetermined annual rate. Okay. Predetermined application rate கேட்டிருக்கு. Predetermined overhead application rate they ask.
Standard
15.
caused by standard hour.
15. Already that's what we worked out.
Hmm.
36 lakhs divided by 36 lakhs.
அவங்களுக்கு மட்டும் கேக்குறானா சார் அவன்?
No, they ask you predetermined overhead application rate for the company.
Okay.
So 36 lakhs divided by 2 lakh 40. What is the answer? 15. 257 per next.
As consequence of background, manufacturing fell behind schedule. Decision was made to schedule overtime to return manufacturing to schedule. Which one of the following methods is the best appropriate account for the overtime? Seems possible.
fall behind schedule is designed to be made schedule overtime returning which one of the following method proper way of accounting for which one overtime paid. Yes, because of the breakdown. Okay, though I mean overtime hours are cost, it should be charged to the manufacturing overheads. Correct. With this, what is over? Overhead allocation is over. Overhead allocation is over.